September 2008. A 158-year-old bank collapses overnight, taking $600 billion with it into the dark. Retirement accounts vanish, jobs disappear, and the air in Wall Street turns heavy with disbelief. But the real story didn't start here. It began years earlier with a single seductive lie. A slogan so simple you could fit it on a billboard: why rent when you can own? The dream was beautiful, easy to believe, and for millions impossible to resist. Mike, our narrator, speaks softly. Everyone wanted a piece of the American dream. It's 2002. America's still recovering from the dot-com crash and the shock of 9/11. The Federal Reserve slashes interest rates close to zero, hoping cheap money will heal the wounds. Suddenly, borrowing feels like breathing, effortless, endless, and dangerously addictive. Buying a house becomes the new national sport. A bank officer smiles. Congratulations, you're approved for $500,000. The couple hesitates. But we only make $40,000 a year. Not a problem, the banker grins. Adjustable rate, balloon payment, ninja loan. Mike explains gently. Ninja meant no income, no job, no assets, and somehow still no problem. In early 2000s America, owning a home wasn't just shelter. It was status, pride, belonging. Ads, billboards, and talk shows repeated the same gospel. Why rent when you can own? Banks agreed, and money flowed like water in a desert. People lined up outside mortgage offices, hearts full of hope and pockets half empty. Even those with bad credit, unstable income, or no savings got their golden ticket. Mike sighs. It felt like everyone was winning, and no one wanted to ask how. Enter the subprime mortgage. Loans made for people who probably couldn't pay them back. A McDonald's cashier signs papers for a luxury condo, smiling as cameras flash. Should I worry about paying this back? She laughs. Not your problem, the broker says. If you default, we'll sell it for more. Home prices explode, doubling in months, and the streets fill with for sale signs like confetti. Mike observes, the dream spread faster than common sense. Even baristas and part-time workers were flipping houses before breakfast. Everyone wanted in, the buyers, the brokers, the bankers. The rules, too slow? Risk assessments, too boring. As long as you had a pulse, you had a mortgage. People bought houses like ramen noodles, Mike says softly, a hint of irony in his tone. Lenders printed loans faster than printers could spit out contracts. Mortgage brokers bragged about commissions higher than surgeons' salaries. The system was drunk on optimism, blinded by profit, and allergic to caution. Behind the open houses and granite countertops, a question whispered, what could go wrong? Mike pauses, his voice heavier. Spoiler, everything. By 2005, owning a house wasn't about stability. It was about flipping it like a pancake. Buy, sell, profit, repeat became the new mantra of a restless nation. Teachers, waiters, and even college students joined the gold rush. Real estate wasn't shelter anymore. It was a lottery ticket with glossy countertops. One woman jokes, I teach phonics by day and buy condos at night. Mike chuckles sadly. Even I started to wonder if I should buy one too. Greed became normal and logic quietly left the room. The more people joined, the higher prices climbed, and the faster the bubble swelled. It was like trying to put out a fire by throwing gasoline, Mike says. Every neighbor, every coworker, everyone had a match to add. But under the glittering surface, rot was spreading fast. Those subprime mortgages everyone adored. They were time bombs in disguise. Wall Street saw danger, but also opportunity. If it can be sold, it can be packaged, said one banker, eyes gleaming. They bundled thousands of risky loans together and gave them a shiny new name. Mortgage-backed securities, Mike explains, now with 80% more lies. To make toxic debt look like gold, they turned to rating agencies for a blessing. The agencies nodded, stamped her away, and cashed their checks. This one's got bankrupt baristas and gym bros, joked a trader. Still, Mike's tone turns cold. They were paid by the banks they rated. Conflict turned into business. Behind the boardrooms, truth wasn't welcome. It was unprofitable. Wall Street then blended those loans into something even more complex. CDOs. Financial alchemy, Mike calls it. Turning garbage into gold, one acronym at a time. But not everyone was fooled. A few skeptics read the fine print and smelled smoke under the shine. These investors didn't see opportunity. They saw a disaster waiting to happen. They asked Wall Street, can we bet against these loans? Bankers laughed. You want to short the housing market? That's adorable. But greed always listens when there's money to be made. So the bankers invented a product to make that bet possible. Credit default swaps, Mike explains, insurance for when those toxic loans went bad, except you didn't have to own the loan to insure it. It was like buying life insurance on your neighbor's grandma and hoping she fell down the stairs. The entire financial world became a Jenga tower of bets, leverage, and lies. Each block was a mortgage, each layer, a gamble stacked higher than the last. Mike's tone darkens, and at the top, they toasted with champagne. Whistleblowers tried to speak up, but their warnings got lost under billion-dollar bonuses. Regulators looked away, too comfortable to care. The floor was cracking, but the party played on. Then came the whispers, missed payments, rising foreclosures, silent streets. One by one, the blocks began to fall. Home prices slipped, and disbelief spread faster than panic. Housing always goes up, they said. It's basic economics. But this time, the basic rules didn't work. The Jenga tower of greed had finally lost its balance. Subprime loans collapsed, dragging everything built on top of them. Mortgage-backed securities, once labeled safe, turned radioactive overnight. Banks that called themselves untouchable discovered they were holding financial plutonium. "We can't sell this junk," one trader said. "It's worth zero." "Then we're done," replied another. "Completely done." Panic spread like wildfire across trading floors and newsrooms. Hedge funds bled billions, investment banks fell one by one, and then Lehman Brothers. 158 years of history erased in a weekend. Mike's voice softens. No bailout, no savior, just silence. The crater it left behind swallowed trust itself. Overnight, credit markets froze solid. Banks stopped lending to each other, fear replacing friendship. "I need a loan to pay my workers," said one CEO. "Sorry, no liquidity," came the reply. "What does that even mean?" "It means we're closed." Mike narrates, "It felt like someone had unplugged the global economy. Businesses couldn't make payroll. Families couldn't get mortgages. Investors watched savings vanish from screens like magic tricks gone cruel. The Great Recession wasn't coming. It was already here." By late 2008, the world was in freefall. Unemployment surged, homes emptied, and faith in money itself cracked. Soup kitchens overflowed. Families lined up with resumes and hope. Mike whispers, "This wasn't just Wall Street burning. This was Main Street collapsing. And the flames didn't stop at America's borders. Iceland's banks went under. Tokyo's markets plunged. London trembled. Global leaders scrambled, voices trembling over phone lines that carried fear. The question wasn't who's next. It was whether the system could even survive. In Washington, the unthinkable became the only option. Let it all burn or save the ones who lit the match. Mike sighs. They chose to save them. Enter TARP, the $700 billion lifeboat for a sinking Wall Street. "I need $700 billion, said Treasury Secretary Paulson. "For what?" asked Congress. "To keep the economy from dying before the weekend." The government started throwing cash like firefighters tossing water at a burning skyscraper. Banks got billions, so did AIG, GM, Chrysler, anyone too big to fail. Because if they fall, Mike explains, they take us all with them. The Federal Reserve joined in, cutting interest rates to near zero again. They began a new experiment, printing money out of thin air. Quantitative easing, they called it, a fancy name for desperation. Mike chuckles sadly. They were patching the Titanic with $100 bills, and somehow the ship didn't sink, at least not yet. Markets calmed slowly. Wall Street exhaled. Stocks bottomed out in 2009 and began to crawl back upward. The headlines spoke of recovery, but Main Street told another story. Millions of families still drowning in debt. 8 million jobs gone. 4 million homes foreclosed. $19 trillion in household wealth vanished like morning fog. Mike's tone turns quiet, compassionate. For some, the dream was gone forever. Families who had never missed a payment now owed more than their homes were worth. One family, the Johnsons, packed boxes in silence as cameras rolled. "We did everything right," the father whispered, "and still lost everything." Wall Street bonuses returned. Main Street got pink slips and food stamps. Mike reflects, the people who caused the collapse got richer. The rest paid the bill. Champagne corks popped downtown while eviction notices piled up in suburbs. Privatize profits, socialize losses. The phrase became a bitter anthem. Anger turned into movement. In 2011, people gathered at Zuccotti Park. Drums, tents, and cardboard signs filled the cold New York air. "We are the 99%, they shouted, tired of being ignored. It wasn't just about bailouts. It was about a broken promise. A system built to protect power, not people. Mike's tone trembles. Justice never came. No CEO went to jail. There were no handcuffs, no trials, just quiet retirements with golden parachutes. The system survived, Mike says, but trust was burned to ash. A generation grew up watching the rules bend for the powerful. When the banks mess up, they get rescued. When you mess up, you get wrecked. That truth sank deeper than the recession itself. The recovery looked good on charts, but not in real lives. Even as stocks soared, families scraped by, paycheck to paycheck. Mike reflects, you can rebuild buildings. Trust takes longer. The lesson of 2008 wasn't about finance. It was about belief. Belief that systems are fair, that effort means safety, that rules apply equally. But when those beliefs collapse, what replaces them? Mike's voice lowers, cynicism, fear, and silence. Some turned away from news, tired of false hope. Others became activists, determined never to let it happen again. Yet time dulled the outrage as time always does. Banks grew larger, bonuses returned. The memory faded. Maybe we learned something, Mike muses, or maybe we just moved on. The world rebuilt itself on new promises, new risks, new confidence. But the foundation, trust, remained cracked. Mike gazes into the camera. Crises don't vanish, they reinvent themselves. The next one here, he says, won't look like 2008. It'll look harmless, profitable, inevitable. Until it isn't. The music fades, replaced by quiet static, like the breath before a storm. Mike reflects, we believed in homes, not houses, in dreams, not debts. But the dream changed shape and started evicting us. He turns slightly, eyes tired but calm. Still, he says, understanding this matters, because what broke once can break again. And maybe this time we'll see it coming. The screen fades to black. Mike's voice, one last whisper. Stay awake. A soft piano note lingers, haunting and reflective. Text fades in. The 2008 financial crisis, never again? Then a final caption. Comment your thoughts. What did we really learn? Mike's off-screen voice. Your voice matters more than ever. Subtle outro animation, simple, respectful, no fanfare. A heartbeat sound echoes once like a reminder of fragility. Fade to black again. Silence. Then a single phrase appears. The price of the American dream. End screen. Quiet, somber, and real.